The intraday trailing drawdown is the #1 reason most traders fail prop firms. And most traders don't even exactly know what the intraday trailing drawdown is. So in this video, we're going to go over what intraday trailing drawdown is and how to overcome it. Roll that intro. Okay, I just want to make this known. I have blown many accounts because of the intraday trailing drawdown. So if you have to, I'm leveling with you. I want you to know you're not alone. It's definitely hard, and it took me some time to overcome it and have to change some of my trading styles. But the #1 prop firm account that I, basically blew up most of the accounts were with Apex Trader funding. Nothing wrong with Apex Trader. Their rules are different than others, but they do pay out. One of the rules is that intraday trailing drawdown, and it was pretty frustrating to kind of not know how to manage that and learn how to trade with it, and blew up many accounts, right? But today, and more specifically, I'm going to be focusing on intraday trailing drawdown with Take Profit Trader. I have a pro account with them. I'm up $950 on a pro account. Just want to discuss that because I got that question quite a few times. So let's get into it. Really quick, I just wanted to show you this is my pro account. It says it right up here, pro, Take Profit Pro. And then my balance currently is $941. I just got this account last week, so far so good. But didn't want to say that I have a pro account and no one believed me. Here it is, Take Profit Trader pro account. All right, so we're going to go over 3 things around the intraday trailing drawdown. First thing is just the difference between end of day and intraday trailing drawdown, so that traders have an understanding of what that's like and why it's significantly harder to trade with the intraday trailing drawdown. So end of day trailing drawdown, we're always going to use the 50K account as a baseline, much easier to talk about, work with. So a 50K account, you're trading 50K and you have a $2,000 daily drawdown. Okay. With an intraday trailing drawdown, if you go up in profit and you start to move upwards in profit, let's say you enter this trade and you go up $2,000, right? You're up 2K. Now your balance is $4,000 and you're trailing drawdown. And the very next day, when the market opens and everything resets, your account is now $52,000. And daily drawdown limit now, you cannot pass 50,000 even. So that's at the end of the day. So you have the whole day. You can run up a bag and make $5,000 if you wanted to, and that means your balance, your drawdown would be $7,000 within the day. You can run it up to $10,000, $20,000. Doesn't matter. It's gonna reset the next day. Okay. End of day trailing drawdown. That is the end of day trailing drawdown. Now, when we're discussing the intraday trailing drawdown, it's exactly what it sounds like. The trailing drawdown happens within the day. It follows you. Let's take a look at this chart here that I have. All right, so let's say you're in the trade. You enter here at this pullback. You go straight into profit. It's a brand new account. You got $2,000 in trailing drawdown. And you go up, let's call it $1,000. 1K. You go up 1K. How much do you actually think your trailing drawdown is? In the end of day trailing drawdown, you would have $3,000 in buffer. But with a trailing drawdown, at this exact point inside of this trade, your drawdown stays at $2,000. So yes, you got in at this point, and now you're in profit $1,000. Your daily drawdown stays at $2,000. It caps at $2,000. Sounds crazy, right? But that's exactly how it works. So what happens if you stay in this trade and it starts to pull back? And let's say these are all just hypothetical numbers. Let's say this pullback is minus $500. So you went up 1,000. It's a 50% pullback. Now your trailing drawdown, intraday trailing drawdown balance is, guessed it, $1,500. Hopefully you're following me. Your intraday trailing drawdown is capped at $2,000. So no matter how high you go inside of a trade, it's always going to be $2,000. You pull back, it's going to start going back against you, $500. And this is where traders tend to fail, is with this intraday trailing drawdown, is they stay within the trade, they get up $1,000 in profit, but they hold until it's minus $1,000. Like they go back to break even. And in their mind, they're at break even when really they took another $500 loss of intraday trailing drawdown because the 1K in profit didn't raise their intraday trailing drawdown balance. It stayed at 2,000, which is why some traders even stay inside of the trade and they move again a negative $500 balance and let it hit their stop loss down here. And what's that, $1,500, and you blew the account, right? The easiest way that I like to explain this, the easiest way, the reason why traders blow up the account is because they're not getting out of the trade when they're in profit right away. In any other scenario, cash account or end of day trailing drawdown, it makes sense to let a trade go all the way up $1,000 and come back to break even and get out, because you would still end with the $2,000 trailing drawdown, end of day trailing drawdown, right? But with intraday, it follows you. Okay, the way I like to explain this is with the rubber band. No, it's crazy, but imagine this top part where my thumb is going to be your cap of $2,000 of intraday trailing drawdown. We move up $1,000, guess what? That trailing drawdown comes and follows you. Now it's $2,000 still. You move up, it stays at 2,000, that trailing drawdown continues to follow you. And if you move up and you let price come back against you, your trailing drawdown is closer than you think. So if you visualize this trailing drawdown with the rubber band, the moment that price comes back against you, you got to get out to protect the trailing drawdown limit. So hopefully that gives you some insight. I used the rubber band before in another video, and that really kind of like helped me understand why traders blow their accounts. Another reason why traders blow intraday trailing drawdown is because they're sizing up, and I'm guilty of it too. But it's even more crucial with a intraday trailing drawdown account that you get out as soon as possible. So these swings of this is a horrible, you should, if you have an intraday trailing drawdown with only $2,000 in buffer, you shouldn't be sizing up to a point where you're $1,000 in profit easily, right? You should probably take trades where you're only going to be making $200 to $300 in the trade, because that gives you enough room and leeway to work with this intraday trailing drawdown. Make sure to size down once you're in a funded account with Take Profit Trader, get to that $2,000 buffer, so that above $2,000, it's basically just a cash account, right? That's with Take Profit Trader. Okay, and lastly, how do we overcome the intraday trailing drawdown? All right, I'm going to keep this super simple for you on how to not blow up your funded accounts that have intraday trailing drawdowns. So this is TP, this is SL, this is SL, and this is your entry. When you enter this trade, it's going to suck for a little bit, but only do it for that intraday trailing drawdown buffer. You enter a trade and it goes against you, it's whatever. It's part of the game, right? But the moment that this trade is now in profit, what I want you to do is trail it. Trail it on a 1 minute candle, trail it in a 5 minute candle, whatever it may be, but follow the market structure. And when you are waiting for the next pullback, you don't want to be a part of this next leg lower to even go higher. Because if this next leg lower continues lower, you've essentially blown up the account, or if you've sized up, you've almost blown up the account. To be successful with the intraday trailing drawdown, you want to take profits early. I don't care, breaking the rules of your setup and trying to wait for TP, because the absolute worst case scenario is you're waiting for TP. Yeah, you make it through this trailing drawdown, and you're waiting for TP, and you get so close to TP and you let that thing come all the way down to break even. That's a huge loss in your trailing drawdown, right? So to be successful in this intraday trailing drawdown, what you want to do is just take profit. You're in the money, $200, $300, $400, take profit, close a trade. If you want to try making more, then you gotta raise that stop loss. So you gotta follow and trail price into profit. and you might get wicked out before the next leg longer, but you got to be okay with it. You just got to move on and wait for the next trade. On my pro account that I just showed you, I'm up $940, but if I would have held, I probably would have been up $1,500 for that day. But you just don't know, and I'd rather play it safe and get out of the trade and not be caught in some sort of pullback, right? Because this trailing drawdown is following you. Just like I said with the rubber band, price goes up, you're in profit 1K, your trailing drawdown is still at 2K. You're up 3K for the day, your trailing drawdown is still at 2K. This is for like a fresh 50K account, right? It's always going to be capped at 2K following you. And the moment it starts pulling back against you, that 2K starts to drop pretty quick. So hopefully that makes sense and provides some insight. Okay, guys, well, I hope you enjoyed that video. If you made it this far, make sure to hit the like, subscribe button, and also leave a comment if you have any questions. Again, I day trade every day live on YouTube. Top Step, Apex Trader Funding, Take Profit Trader are the three prop firms that I use right now. I don't have any affiliate codes yet. I'm hoping to work with them at some point, but I'm just giving you my education, the things that I've learned over time, and sharing it with you. I'll see you guys in the next video. Peace.